Hello, everyone. Here we go with today's market update. So if you're new to these, we do these 3 days a week live from our YouTube channel here. And what it is, we have a look at the major markets, what's been going on. A lot has been going on again in the last couple of days. Let me just bring the risk warning up. Some of the levels to watch, trends, that sort of thing. I think it's best described as a bit of a choppy week so far. I think particularly when it comes to FX and arguably to indices, there's some incredible volatility yesterday when US markets open. I think I put something up on Twitter. I think it was something like in the first 45 minutes, the Dow traveled through, I think, 175 points yesterday on the US Open. And it was down to President Trump tweeting about trade tariffs, particularly, I think, tariffs that were going to be imposed potentially on vehicles coming from the EU. The DAX got absolutely clobbered, clearly, because if suddenly there's tariffs on BMWs and Audis, that's not going to be good for the German economy. So loads of volatility yesterday for stock markets at the beginning, but it did end higher. You know, and we'll look at that in a bit more detail. So we'll take a look at FX. We'll have a quick look at Bitcoin. We'll look at indices and we'll look at gold and oil. Oil is interesting only because it hasn't gone down to new lows yet this week. So famous last words, $50 so far seems to be providing support, but we'll take a look at that in a bit more detail. When you're watching on YouTube, there is a chat box to the side of the screen thing that you're watching. So if you have any questions, you know, we looked at lots of markets last time round at the end of the session. So if there's anything in particular you want to look at that we don't get covered, put it in there, or any questions. I'll try and cover them. Okay, that's it. Let's get going and see where we are. Let me just make this full screen. So the big event today is, of course, Brexit related. So we'll start off with the pound. So we've had already today some forecasts from the UK Treasury, so the UK government financial department, the effect that Brexit may have on the UK economy. And arguably maybe the bigger one comes, I think it's 4:30 this afternoon. So at 4:30, we get the forecasts from the Bank of England. So independent from the government, obviously, but led by Mark Carney, who I think it's fair to say the governor of the Bank of England is not the biggest fan of Brexit. So it'll be interesting to see what those numbers look like, what their forecasts look like when they come out at 4:30. So we may have potentially something of a quiet afternoon for the pound, just marking time. But let's see where we are this week. We were looking at this when we did the last one of these on Monday, and I did actually buy this yesterday. I was underwater for a bit, and it's moved into profit now. But we were talking for the pound. It's really obvious where the support is. You know, it's a massive level. Someone's typed in Russian. Unfortunately, I don't understand Russian. So if you wouldn't mind running your question through Google Translate, I'll be able to answer it for you. The massive level on the pound, 127, and let's just flick this back to and it's the August lows. You know, this really is the big level to watch for the pound. We had the lows in August, 126.60, the lows in late October, 126.90, 127, the lows in the middle of November, 127.24. Where did it go yesterday? Same sort of level. So we saw the pound under pressure again on these concerns. You know, this latest agreement that Theresa May, the Prime Minister, has proposed has been accepted by the EU on Sunday, but the bigger job is getting it signed off and voted on in the UK Parliament, and there's plenty of opposition to that. But you know, here's what's happened. Here's what's happened this week. So it did break down yesterday, breaking below these old lows from November the 21st. So for me, it was an obvious buy, thinking, well, okay, well, maybe the knee-jerk reaction's been overdone. We've got big support at 127.20 from the week before. So I think I bought a 127.53 in the end. You know, it was underwater for much of yesterday, but so far today we've seen the market claw back some of those losses. But let's see what happens at 4:30 when the Bank of England comes out. So maybe we'll have a quiet afternoon until we get the Bank of England's forecast. But nothing has changed. You know, it's still, for me, 126.50 through to 127 is providing a floor for the pound. It's been that way for 3 months. And at the moment, at least, there's no signs of this changing. Let's just chuck some indicators on this chart. Let's put an RSI on. Let's put a 10-day RSI on this. I'm guessing it's going to be near oversold. It's sort of hanging around there. The last time it went truly oversold was back here, end of October. So that's the level to watch. But so far today, it has had something of a bounce back since 8:30 this morning. It's gone from 127.30 to as high as just above 128. So we've had a 70-point move so far today for the pound. Let's see what happens when old Brexit happens. Is that not Brexit? When we hear from the Bank of England this afternoon. Now, we did do a little trade on the euro the other week, and that's been stopped out. And my trade was basically taking the view that the break through the trend line, and it might end up being something of a false break. We see the market claw its way back. It did do a bit of that on Monday afternoon, but since then it's broken lower and it's sold off the euro. So we do have this new trend that's been in place for euro dollar now. So if you go off those highs, let me just get rid of these lines for now. So that trend has gone. So we're now looking at a trend off these highs from, I guess, up here. If we're gonna plonk it something like that. So at the moment, our euro dollar trend, this is on the hourly chart, has been chugging along for, what is it, 7 days. So if we got a rally from where we are now up to 113.40, that trend is still down. Arguably looks like a bit of a selling opportunity. It's been a bit scrappy again though, the euro, I think, in recent weeks. We had that break. If we flip back and take a look at someone said, can you explain every single thing on the platform? I'll explain things as I go along, and we'll have a bit of a session towards the end where we'll look at some of this stuff on the platform. So I have taken that question on board. So we had this false break in the euro where it went below 113, and 113 had held the market up since June 2017. We had a break here beginning of November, but it reversed off that level pretty quickly. So I think for me, the interesting chart now is the daily chart for euro dollar. If we think this was a false break because the market moved so quickly back up, then the euro should not break below 112. Okay, so we're about 80 points above that at the moment. So even though it's maybe been a bit scrappy the last few weeks, maybe where it gets interesting is if it moves back to 112. Do we see the buyers come back in again? So potentially there's a trade there. It's still weak at the moment. The trend for the last week has been down. Let's come back to it on Friday and see where we are. Okay, so bit confusing, I think, euro at the moment, but 112, the really big level to watch. If it loses that, if it starts trading below 112, then clearly that break starts to look like a valid break, and we're targeting probably initially the old lows from May, just below 111. Okay, so let's see. And tomorrow evening, Thursday night, what could cause volatility for foreign exchange markets, we have the latest Fed minutes. So the minutes from the last meeting of the US Central Bank, the Federal Reserve, will be released tomorrow night at, from memory, is it 7 o'clock UK time? So they'll come out tonight. So there could be some volatility there. So FX, a bit scrappy so far this week, but the pound could be one to watch later on today, 4:30, when the Bank of England releases its forecasts on the impact it thinks Brexit could have. Let's talk about oil, because this move in oil, as we know, we've been watching this, for a while now. It has been relentless, off those highs, off those $77 a barrel highs that the market set beginning of October. So 6 weeks, 7 weeks after that, the market's lost $26. So it's more than a third the price of oil has dropped by. And I suppose what's interesting, without getting too excited, so far this week, we'll look at the short-term chart in a minute, $50 has held. So November the 25th, which was Sunday trading, dipped down towards 50. But you can see Monday, about 50.50. And then on Tuesday, 50.35. And today, trying to push a little bit higher, trying to push up to the highs for the week. But before we get too excited and start to think, well, this is the bottom in oil, it did this a couple of weeks ago where we had stability for a week. The market moved higher only to fall off a cliff and push down to fresh lows. It is interesting down here because I suppose if anything's going to be viewed as a psychological level, it is 50. It's the old round number thing. Let's see what happens. So if you absolutely desperately had to buy oil, then putting a stop below $50 is the logical place to do it. Let's take a look on the hourly charts. That trend is still down though. Before we get too carried away and start loading up on oil, that trend off those highs is still down. I think at the very, very least, we'd want it to move above 56 at least to show some strength through a previous major high, to at least suggest we were seeing any sort of half decent recovery, any sort of chance for that trend changing. But 50 is a big one to watch on oil. So here's the hourly chart. You can see it sold off yesterday afternoon, about 5 o'clock yesterday, sold off down to 50.30, and we're about $1.30 higher today. What is positive, it's had a little poke out this morning, 6 this morning. It has poked out above these highs from Monday and Tuesday. So for the moment, at least, the bias for the week is still up. But let's not forget about that major downtrend that's in place. So this is a really interesting market. And I'm always tempted. We shouldn't try and call bottoms, but it is always tempting, I think, in a market that's dropped as much as this, if it shows some stability, to maybe get sucked in. But still, the disciplined approach is to look to sell into major rallies. But 50 is an interesting one on oil. Let's see where we are when we do this on Friday. But at the moment, for the week, famous last words, it's positive. And it's the fact it moved out to fresh highs for this tiny recovery is positive today. So let's see what the rest of the week brings. And of course, this afternoon 3:30, oil inventories. So every week, the US releases oil inventory data. It's basically data on how much oil is stockpiled in the US, and in recent weeks, that number has been higher than expected. So there's been a fear of oversupply in effect, and that is something that's weighed on the oil price. So let's see what happens this afternoon. That's 3:30 this afternoon. So when you're waiting for the Bank of England at 4:30, you can keep an eye on the price of oil an hour before to see what happens. Okay. What's next? Let's we're on commodities. Let's take a look at the price of gold. I think it's given up a bit this week. Gold, it's given up quite a lot actually. Looking at this, so from when we were looking at this on Monday, we'll flip over to the daily. So it's dropped about $12, $15 this week. But for me, I think the trend I've been talking about, I think I did mention I bought it as a long-term thing, was this recovery trend here. So for me, it doesn't really change anything, really. We've still got that recovery trend going on in gold. Maybe we'll have an interesting couple of days because we have these old lows from, 11.95-ish. So about $20 below where we are now. They did end up being an important low earlier this month. Let's see what happens if it bounces back up and we get a move. But for now, the little recovery is still chugging along. And for me, unless it breaks 1180, that recovery is still valid. So it's not maybe the most exciting of markets, under some pressure in the short term, but an obvious trend coming in down there. So for now, for today at least, it's been really quiet trading today. We've only traded in a $3 range for the price of gold today. Got clobbered yesterday. But so far it's holding above yesterday's lows around about 12.10. Let's see what happens. But for me, the important trend on gold is that little recovery, and for now, that hasn't changed. Let's take a look at stock markets. I said stock markets were really interesting yesterday. Let's start off looking at what are we going to look at? The Dow first of all. So I said it moved something like 175 points, the Dow, yesterday in the first 45 minutes, and it was all down to Mr. Trump. Mr. Trump's tweets about trade tariffs. So let's just flip this over. If we make it a 1 minute chart, let's go for the really dramatic view. What was the date yesterday? 27th. Okay, and you can just see, here's the move. So we started yesterday. So the US markets obviously opened at 2:30. So the Dow opened around about 24,530. Trades as high as 24,570. Then over the course of the next, it's not even 10 minutes, is it? Goes from 24,570 to 24,433. So some massive swings, and it was off the threat of these tariffs. Clearly, these potential trade wars between the US and China, the US and Europe, still ongoing. But as the session unfolded, the market pushed higher. Let's flip this back to a more sensible chart. Let's have a look at an hourly chart. So as the session went on, we did see the market push higher, and today, so it closed yesterday here-ish, 24,800. I think it was up 100 points, 108 points on the day in the end, the Dow. And because with us it's a 24-hour market, you can see it strengthened further overnight. So it's up about another 100 or so points, the Dow Jones, from where it closed yesterday. So it's really building on this recovery. And we were looking at these levels on the daily chart. Sorry to keep flicking about, but we were looking, I was saying, you know, big levels coming up for stock markets. They've had a tough time in the second half of November, but the lows from late October were the ones to watch. So on the Dow, 24,100, and also the low from back here, back in June of this year, did go almost, briefly oversold on the Dow, the 23rd of November. And you can see the daily candles there. You can see from the colors, we've seen something of a strong bounce back over the last 3 days for the Dow. So for me, for my money, the opportunity is, and clearly none of this is financial advice, but the opportunity is, if the market sells off, to be a buyer in weakness. If we pick up on the trend, off these lows since the end of last week, I think, we've got this recovery trend chugging along. On the hourly chart, on the RSI, yes, it's looking a little bit overbought, so it is a bit overheated up here. But if we do get something of a sell-off this afternoon, if we pull back more into yesterday's range, what were the lows for yesterday? The low for yesterday was 24,430-ish. We're 500 points above that pretty much now. But if we see a bit of weakness into yesterday's range and the strength come back in, that's to watch for. But stock markets, really volatile start to yesterday. They sorted themselves out. We saw a positive finish, and it looks to be strong going into today's open, which is just under 2 hours time. So that's the Dow. We won't look at the S&P because I'm going to guess it's pretty similar. Let's take a look at the Nasdaq though, because clearly, tech stocks in recent months have taken a battering. The so-called FANG stocks, Facebook, Amazon, the other A, Apple, Netflix, Google, fears about overvaluation, they have dragged the rest of the broader market down, all of that sort of stuff. The Nasdaq arguably looks weaker than the Dow because the Nasdaq hasn't held in the last week over those October lows. It did slip to fresh lows for the down move. So not as bullish on the Nasdaq, but clearly we still have these big levels from back here, 6,400, 663, but a bit more vulnerable, I think, to the Nasdaq to a sharper reversal. We could pick up on the trend that's been in place since here. Let's take a look on the hourly chart. Again, I think for shorter term traders, if we saw it pull back into yesterday's range, the low from yesterday, just ahead of 6,600, the market at the moment is about just about 150 points above that. If we saw it reverse and pull back in, let's wait and see if we see the buyers come back out. But the theme for the week for stock markets is positive, volatile, but positive, and looking strong going into today. Let's look at the DAX. The DAX got clobbered yesterday, and I know this because I put a trade on just before it got clobbered. But let me look at this. So it was this again. Is the tweet about tariffs? Okay, so it was almost recovering, and it would have been, where was it yesterday? It would have been here, I'm guessing, just as US markets opened. So it was a tweet about tariffs on European cars. So the DAX was up at 11,340. This is a 5-minute candle. So in the space of 5 minutes, off the back of that tweet, the market lost 60 points and then slipped a bit lower. So it ended up coming off about 80 points off the highs of the day. We have seen a more positive start for the day. It gapped higher this morning on the strength of those US markets finishing strong and strong overnight. But again, it's been a bit scrappy today. The DAX. So I'm pretty much, to be honest, I'm pretty much where I bought it yesterday, 11,320, whatever it is. So, but for the DAX, we have seen the lows for the week. If we go back to here, or the lows end of last week, sorry, lows from last Friday, 11,250 has been a level for the DAX from last Friday. Yesterday, it traded down to 11,260. This morning, we saw 11,280. So for now, at least, on weakness below 11,300, there does seem to be an appetite to be a buyer of the DAX. And finally, and I'll move on to any questions that we've got. Finally, the FTSE. The FTSE, again, the FTSE, the UK stock market index, traditionally does better when the pound is weak, because so many stocks in the FTSE 100 derive their earnings from overseas. So let's see. But there's our FTSE chart. Let's flip it over to a daily. It was looking pretty choppy earlier this week, and it's still the same. We've got a clear trend for the week. This is the daily chart we're looking at, but it is a bit scrappier than those US markets. That again, any weakness sort of below 7,000 on the daily charts brings the buyers back out, but it is just a little bit. It doesn't have the same sort of momentum that we're seeing in US markets. So the lows for yesterday in the FTSE, again, the Trump tweet inspired lows around about 69.90. The market touched 7,000 this morning and has bounced back. So I'm going to answer this question now about having a quick look at some of the functionality on the platform. But I think the markets to watch. Oil is interesting because it hasn't actually gone down for 2.5 days. Yeah, so it moved to a low on Friday. $50 has so far been a floor for oil. Let's see what this afternoon's thing brings, oil inventories, and see if we can maybe build on some sort of recovery. But let's not get too carried away, because we saw it stabilize a few weeks ago, only to plunge lower. And the pound US dollar this afternoon, because we've got at 4:30 that Bank of England release on its forecasts for the economy after Brexit. So let's see what sort of effect that has in the pound. But so far, it's taking some of these gloomy predictions today in its stride. So the quick commercial, of course. Don't forget to get access to all of this. If you have an account with us, you can access the charts that I've been looking at today. You can trade fractional size when it comes to trading these markets, so you don't need to take on loads of risk. So if you go to Capital.com, you can open an account, open a demo account, open a real account, download an app from an app store, and you're away. Okay. Now let me deal with this question where someone's asking about the functionality. I mean, like all trading platforms, there is an absolute bucket load of functionality in our trading platform. Let me go to this Discover page. But again, I think like most other stuff, there's only, you maybe use 10% of it. So for me, the charts is clearly important. But if you log on and go to the Discover page, you have things like, what's moving, top traded in equities, for example, Tesla, not surprisingly. It's the tech stocks, isn't it? Netflix, Facebook, Amazon. Forex, most traded, euro, pound, US dollar. Crypto, we've got to look at Bitcoin, didn't we? Bitcoin, most traded, then Ripple. Commodities, natural gas, it's interesting. Gold, oil, crude oil, Brent. Indices, I'm guessing the US markets. The NASDAQ, okay, the NASDAQ. The DAX, the FTSE. So that you have all of that sort of stuff. When it comes to trading and charts, you can build up a watch list. So if I go to most traded, lots of our clients trade natural gas. So natural gas, because it has been moving around. If you want to add that to your watch list, just click on the little gold star thing, and it gets added to your watch lists, and you can scroll down and see who's trading what. Go to favorites, that's your watch list. So this is my watch list I've built up of stuff I want to watch. Recently traded is stuff you've recently traded. Top risers, what's moving on the day? It's the crazy cryptos. Bitcoin, euro is up 6%. Oh god, let's get to some proper markets and not these cryptocurrencies. What else is moving? Store brand up 3.5%. Nestle up a bit. Top fallers, biggest fallers, Continental AG, maybe on that Trump tariff tweet, maybe. I'm guessing that's the tire manufacturer, isn't it? Big faller, all that sort of stuff. Most volatile, there we go, they're in there. So for me, my sort of go-to screen is the favorite screen, because that's the stuff I want to watch. So if I click on something like the S&P, the chart appears down here. Yeah, so for me, maximize it. And there's my chart. If I want to, I can add this to charts. If I click on add to charts, top left, let me go and pick another market. Let's pick the NASDAQ. Go on that, go on add to charts, and you see this button on the left-hand side, the third one down. They're now in there. So I've got my S&P and my NASDAQ charts in there. Okay, so it makes it really easy to navigate. Clearly, they changed the period up here, the drop-down thing on the periods. You can change the type of chart here. You can buy and sell, the important bit, off here, and that opens up a new screen. Okay, so you can trade your size. Like I said, you can trade really tiny with us up to really big. What else do you need to know? Indicators. You want to add indicators? Is the third one along. So add various indicators, the most popular oscillators, different trend indicators, volatility, all that sort of nonsense. That's in there. If you have any open positions, you click on positions and you'll see it in there. Any orders waiting to happen, and your trading history, and you trade your settings in there. So you can change it to like a white screen rather than a black screen, change your language, all of that. But for me, you know, once I've set it all up, and once you've set it all up and you log on, for me, the most important thing is the trade bit, because I can go to my watch list there, go to favorites, and just click and have a look at the various different charts to see what's going on. It looks like we jinxed that oil price. Has it sold off? No, it's sort of stabilizing, isn't it? About 51.5. So I hope that's answered your questions on that. What it means, 3%, how is it calculated? I think if you're talking about whatever it was, clearly the biggest mover, biggest riser is the change on the day, if that's what you're talking about. When it comes to volatility, I'm not sure what that calculation is. I'll find out for Friday's thing, but the percentage is the biggest rise and biggest mover. What else we got? We did look at gold. Can you please mention accurate indicators for checking momentum and volatility? It's a good question. I'm not a massive fan of indicators, but I mean, I suppose, I mean, for momentum, there is a momentum indicator, and I can't remember how it's calculated, but it's a really simple calculation where it looks at the price today, takes the price away from yesterday or 10 days ago, something like that. If I add it on, it'll make sense. If I pick on the momentum indicator here, so this is a 14-day momentum indicator. Let's change this to a daily chart. Here we go. So when the momentum indicator is falling, it's suggesting the trend in the market is falling, and when it starts picking up, it's suggesting momentum's turn. But I think the easiest way of looking at momentum is to just look at what the market's doing. You know, look, you don't need to look an indicator to be looking at oil at the beginning of November to know the trend was down. Yeah, the price of oil was falling. We don't need an indicator to tell us that. When it comes to volatility, probably the most traditional, I think, volatility indicator is the Bollinger Bands. Okay, so let me just add some Bollinger Bands on, because they always look very pretty. There you go, look at that. So you can look like a real expert when you've got lots of stuff on your charts. So let me try and remember how Bollinger Bands get calculated. So the line in the middle, so this line here, hopefully you can see that on the chart. Can I change the colors? Let me change the colors and make it all a bit brighter and a bit thicker. And then I'll talk it through. Right, here we go. Okay, so the line in the middle, which is like a muddy brown color on my screen, that's a 20-day moving average. Okay, and then the lines either side are standard deviations. So they're 2 standard deviations away from the moving average. So the approach is with Bollinger Bands, if it's 2 standard deviations away from the moving average, 95%, I think, is the figure of the price action should be contained within here. Yeah, so what happens is the way it gets used for volatility, if you look at here, look at this period here, middle of September, when the Bollinger Bands move close together, it means volatility is dropping. So you can see that they're much closer. Let me zoom this in. They're much closer here than they are here. Yeah, so when volatility is dropping, the Bollinger Bands get closer together. And I think traditionally it means wait for a breakout. Yeah, you could well see, what am I trying to say? You could well have an explosive move. We just don't know which way. So we wait for the breakout. When the Bollinger Bands get far apart, like they have been on oil, volatility is high, clearly, you know, and in theory, volatility should reduce back to normal, but it hasn't happened so far. So, but it has done, I suppose, a half decent job on the downside for oil of sort of calling the extreme of every sell-off. If we had a few days where oil traded a bit quieter, or a week or so, the Bollinger Bands would come close back together again. But that's the traditional way. The traditional indicator, I think, for volatility is the Bollinger Bands. So that's how they're used. So I hope that helps. But you can't be looking at the market, looking at the trend, and see what's going on. So I hope that's useful. How can I receive alert if a market rises? What you can do, I should know this, but I don't think you can set alerts on the app. And I'm sure if I'm wrong, someone is going to correct me, and I'll get back to you on Monday. on Friday. But if you're on the screen, but if you're on our app, so if you have the app on your phone, it's really easy to set alerts from your app. You just go to the market and there's a little alarm bell thing you can tap. So let's say, for example, if we go back to our oil example, if you wanted to have an alert, let's say if oil, what's been the high for the week for oil? And I'm a big fan of alerts because it means you don't have to waste your time sitting there just watching the screen all the time. But if you wanted to have an alert if oil broke above today's highs, so today's highs are 51.85, let's say you'll have an alert if oil gets to 52, it's very easy to set that up from the app. Okay, so you can do that if you have the app on your phone, whatever sort of phone you got, you can set that up from there. I don't think you can do it yet from the platform, but if I'm wrong, I'll let you know on Friday. That's it. Okay, no more questions. We'll wrap things up there. Thanks for coming along. So we'll do all this again on Friday lunchtime. Actually, I'm going to be out of the office on Friday, so we're definitely going to do it on Friday, but it might end up being a bit later than 12:30. But as long as you're subscribed to our channel by clicking that subscribe button down below the screen, you'll get a push when we go live. So it might slip a bit on Friday, but we'll definitely do a live session on Friday. See where we are, see where these markets are. But like I say, I think in the short term, oil, because $50 is holding, the pound, because we've got the Bank of England this afternoon, and stock markets, because we've seen a strong week so far, despite that volatility. Okay, we'll wrap things up there. Don't forget to find out more about the company, go to the website, Capital.com, and you too can have charts like this with pretty Bollinger Bands on it if you open an account or open a demo account. Thanks for coming along, and we'll do it all again this Friday.